What's going on, guys? Nickel Mission Effects here. So two things before we begin. One, I'm not a financial services provider, so don't listen to anything I say in this video. I'm a complete idiot. I'm a demo trader flexing on my demo millions, and you shouldn't listen to anything I say or take me seriously. Consult a licensed financial services provider before placing trades in any financial market because they are risky. That being said, also on top of that, if you want to learn my exact trading system, I have a free course that you can do. Just click the link in the description. And then with that free course, once you finish it, I also give you access to my free Telegram channel, which has like 15,000 members just about, or close to it, probably even more, maybe by the time you're watching this. And I share my daily analysis in here, the analysis and the trades that I take for the day. Whether it's a win or lose, you can see all this stuff right in front of you, along with having that free course, along with having like these free YouTube videos. So it's a great place to get started if you want to learn how I trade. That being said, let's dive right in with this week's analysis. So I'm in one trade right now. And let's take a look at this. 80 Canadian dollar here on the daily. We can see that we are trending downwards. So the market right now is just breaking lows, retesting as resistance, and then continuing downwards. So this just happens over and over and over. As you can see, the market's going right there, and then we have this occurred right here. So I am short on this trade right now. This is my actual stop loss and actual target, and I actually called this morning in that free Telegram channel, which if you're not in that already, you'll get access to that in the free trading. But yeah, my stop is just above, my target's down here. It's about a 1 to 2 risk reward ratio. I'm just going to wait and see what happens as price continues down. But this is just a very simple trade. It's just a daily downtrend. Price has broken a significant horizontal support level, and it has retested as resistance before starting to fall away. And it entered this morning after price started falling away. Stop loss is in a good place because if price, to hit that stop loss, it for one has to do a couple things. Number one, it has to break above this horizontal level right here, which I guess I could clean up a little bit. Make it something like that if I want to be more pinpointed with it. Price would have to break above that level, and it also have to break above this potential downtrend line. We've got like 3 touches in this downtrend line right here. So price would have to like break both of those areas to hit that stop loss. So it's going to be really hard to hit that stop loss if price is going to continue in a downtrend. Okay, so I'm in on this trade. We'll see how it goes. GBP New Zealand dollar. I was in a sell on this trade, and I've since closed it at around break even. It was actually a small loss. It was a couple pip loser. I'll show you why. So here in the daily, if we're looking, it's in a daily uptrend. Price has come to a major extreme daily like resistance zone. I'm going to clean up this level right here. It's more of a sub level, and I'm going to show you the level that I was working with earlier. It was this right here, okay? And I had this arrow pointing to here, and I'll show you guys why. So if we're just making it plain and simple, I just thought price was going to respect that daily resistance zone. I thought more people were going to take profits and price was going to drop. So I was in a sell from up here. And my targets were down here, or just like somewhere down here. Targets are all dynamic, but essentially my stop was like above this level like that, and target was down here. Now I got stopped last week trying to short this, not stopped out, but I was in essentially like this sell right here. I booked some profits when price came to the target, and then it went up and stopped out the other half of my position. So essentially what I'll do is as price moves into profit, I'll generally scale out of my trades. I'll generally like close like a good portion of them, probably like half the trade once they go into a good amount of profit. And then what I'll do is I'll let the rest of the trade run with a break-even stop to try to capitalize on those big, huge moves that you just can't ever predict. For example, if you're going to trade this along with the uptrend, and you're going to trade like just normal breaks and retest of horizontal levels, you could go in there, you could see that price hits that area, starts rejecting, and as it starts going upwards, you could say, okay, I'm going to take a buy here, stop below, and target here. And so if you take all your trades should have at least a 1-to-1 risk reward. The reason I teach this against most people's like crazy like stuff where they say like 1-to-1 is horrible, you should never do 1-to-1. The reason I teach like that is because it's so easy to get profitable that way, and it forces you to focus on what matters, the plain and simple stuff. And the plain and simple matters of it is that you should just be trading breaks and retests during the trend. It's so easy to just wait for a super clear, obvious trend and trade breaks and retests of horizontal levels within that trend, okay? It's not gonna work out every time, but most of the time you're gonna be fine if you just stick to those daily levels and those daily horizontal levels within clear trends. And it's not that hard to do. So that's why I teach trade with a 1-to-1. Once you get profitable doing that, then you can transition to like a 1-to-2, 1-to-3. You can start testing like your dynamic entries and how to pinpoint trades. Maybe you'll do something where you like, you enter like somewhere closer to the level and have a closer stop and have a more extended target for like 1-to-2 or something like that. But remember, your goal to get profitable is just going to the daily and H4 chart and finding the clear trend. If there's no clear trend, then just don't trade, but just find a clear trend and trade breaks and retests of horizontal levels within that trend. it just works out pretty well for the most part. Not every time, but pretty well. So we had this, we had price break above, test here and go up. And using those dynamic like profit targets and stuff like that, for example, like I was saying on this one, if you entered right there on a buy and you had your stop below this level and target up here, after price goes, for me, it's usually like a 1-to-1. After it goes in like a 1-to-1 profit from wherever the stop was, I'll typically just move the stop to break even, and I'll just let the other half of the position run after I close half the position at that 1-to-1. And what that does is it allows you to book your profits, like, you know, into your account balance that you're profiting a little bit and closing trades in profit. And then the rest of it, like, you know, half the time it'll come back and stop you at break even. And then, you know, the other half the time or whatever it is, it'll continue going into huge profits. You'll never be able to predict these. These just happen randomly. Like the big winners happen randomly. You're never going to be able to predict how far a trade's going to run. Only thing you can control is your risk. So keep your risk like at very consistent levels. If you're going to risk 1 or 2% per trade, or, you know, a certain amount per trade or whatever, just stick to that and don't change it. And because it'll keep you going through like down days and down weeks and stuff like that. You guys who have been following me very closely the past 2 weeks know it's been really hilarious. The first 2 days, or except for last week, it was the first 3 days. But essentially these past 2 weeks, the first part of the week has been crap. I've just had consistent losers. And, you know, I'll have like a winner or two, and then I'll have a bunch of break evens and some losers. And that's happened like for the first half of the past 2 weeks. However, the last half of these 2 weeks have been crazy good. All these trades ended up going into huge profits. They wiped out all the losers with substantial profits by the end of the week. That happened 2 weeks ago, and that also happened last week. And lo and behold, this week, as hilarious as it is, I'm like down a couple percentage points because I've had 2 trades stopped out on yesterday, which is Monday, and then I closed a couple trades today at either break even or small profit, small loss. Being the only trade I'm in right now is 80 Canadian dollar, which God knows where this is going to go. Who knows? So that being said, this week is off to like not a bad start, but just, you know, we're down a couple percentage points. I'm down a couple percentage points. I have plenty of people in profit who are in my Telegram, and plenty of people who are in profit in my students group. But yeah, for me, that's how it is right now. And it's all good because it's only a matter of time before the crazy profitable day comes where just a huge trade ends up taking off. And so that's why I am cool. And that's why you should be cool with having like little losing days. Because in the end, if you have a good trading system that's super simple for you to duplicate, it's all going to work out in the end. So that being said, why did I take this trade? I got stopped out on it at break even like last week, and then I entered again today. It was something like this. So it was like right there, had a stop above, and I had a target down here. Now you may be asking, Nick, yo, what the hell are you doing? What is going on here? This is a daily chart. How'd you get that trade? I'll show you. So using the overall like daily bias, right? That's an extreme high right there. Price pinned past this level like 3 times and then harshly rejected. I was literally thinking, I was like, man, price is going to probably reject that daily high. Like it's been going up for a while. We should see some sort of a sell-off. So I just thought price was going to bounce away from that daily level for a bit and maybe come back to these lows, or, you know, one of these lows within here and like another level or something like that. But long story short, that's what the whole trade was based off of. It was based off like a rejection of this daily high. And so that being said, right there was that, and I had this little horizontal level in there where I took an H1 trade. So after price had rejected this daily level, which was all this stuff right here, price had come down here and it had broken and retested this horizontal level. Now, if we go a little bit closer in, I can fine tune this level and show you guys what it actually looked like. So it was right in here, and I'll show you guys literally the moment I entered it in, the moment I called this trade. This is what I was looking at, okay? It was a support, 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 and it had broken and retested with the rejection wick right there, okay? So that had broken and rejected. So at that point, that's when I decided, all right, cool. Like it's rejected the daily area. It's broken up below that low, tested as resistance, started falling. It's now broken these lows. It's tested as resistance. I just thought it was going to continue down. And so I placed a sell this morning, called it to all you guys, had my stop loss above this area, and I'll just go ahead and go to the right. Had my stop loss above this area, and my target, my hard targets are at those previous lows down there. But remember, that's dynamic. Like this says 1 to 5, but that was not. That was my stop was like somewhere up there, and my target was it was those lows. So it's like a 1 to 4, but still, that's not the important part, because like I would be scaling out of the positions as soon as they went into like this much profit, and then I would just put the stop to break even and see how far it'll run. But so that being said, this was the trade. It was really simple. It was just break and retest because I thought it was going to go down with a couple bit of other context things like this daily resistance area, the fact that price had broken this low right here, and I tested as resistance a couple times and then broken these lows. I thought there was enough like data pointing to the fact that it was going to go down. Well, here's what happened. Going to lower time frames like the minute 30, price kept on going sideways, then it broke above, and then it closed with this minute 30 candle right above in here. And so I don't remember exactly. My stop loss was like somewhere up in here. I mean, let's check. I called it out. So where's these ones at? GBPs. So this is it right here. So my stop loss was at 2.0464. So that was it. That was it right there. And oh my God, it's gone away again. So it looked essentially, so it was, like this. So that was the trade. I entered as it came up there and started rejecting. And then I closed at break even after it closed above. Because here's the thing, if price is going to be going in your favor, it's generally going to go and test the level. And then if it starts rejecting away and you enter, it should start going on a profit relatively quickly. If it doesn't and it goes sideways, doesn't mean it's a bad trade, but it just works out less often as compared to the trades that just start going right into profit. Those trades that you take, whenever you let's say breaks and retests, or breaks this area, then it comes back and retests, and then you get an entry. And then for some reason, right after you enter, it just starts going in a profit. And then you're kind of in the trade a little bit. Then it goes to the previous area. And then it starts bouncing up a little bit again. And then after it bounces up again, it just goes into more quick extreme profit. And then you're sitting over here feeling really cool because your entry was like that. And your stop was above and your target was below. And it just goes into substantial profit really quickly. Those are the trades that are good. Those are the trades that work out really well. And those are the trades that you really want to expand on. You really want to hold a little bit longer and try to see how far you can let them run. But the trades like this, where whenever you enter, it just starts going sideways with a few candles. It tries to reject, but it just keeps on stagnant, going sideways, and then goes up above and closes back above the level. These are the kind of trades that typically they're going to be more of a pain in the ASS. I'm trying not to curse as much on my YouTube channel, but you guys who've been following me for a while, you know that I curse regularly just because I'm pretty direct and pretty raw. But that being said, I'm going to try to curse a little bit less in these videos. So here we go. They become a pain in the ASS if they start going sideways and start breaking above the level and trying to crack above. So that's why I typically close trades early if I'm seeing rejection or prices just going sideways or it's just being too hard. It's not being an easy trade, because those trades, half the time that they start consolidating and going sideways, they're going to just give you a lot more problems than not, as compared to the trades that end up going right into profit. A good example of a trade that would have gone right into profit, if you're trading on just directly based off the 1 hour, I try not to, but hey, if you're trading off the 1 hour, more power to you. So if you're saying up here, hey, price is rejecting this daily resistance zone, it's rejected that zone, come down here, broken past the previous low, come up into this region in here, and then it's retested it right there with that wick. So if you're making a decision to trade based off the rejection of that, watch what happens. You enter the trade, you have your stop loss above, and let's say you have your target down here. This would be like a 1 to 2, or maybe your stop is further and it's a 1 to 1.5, or whatever. So, but you have a target right there and a stop above. Look at how easy this trade was. It went directly into profit after you would have entered, within the next 1 hour candle, came back up to the entry, and then went directly into huge profit super quick. There was no sideways consolidation, slowly trying to go up, slowly trying to reach for your stop loss. This one didn't play around at all. It just went right to the target. Those are the kind of trades that you want to capitalize on, and then, book a little bit of profits. After they've gone to a little bit of profit, then you get those stops to break even, and you just extend and just see how far your targets will run, and see how far they'll keep going. Those are the trades that end up working out easily. But this one right here, this one was just being too much of a pain and just started slowly consolidating upwards. So I closed it right here, and that was however much it was a small loss, but price kept on going up. So this is an instance where price action ended up, working out for the best for me, because I closed early because the trade wasn't easily going into profit. This will not always happen. You will have plenty of times, half the time, where you close the trade early, just to mitigate risk. So you close at small profits or small losses or whatever, maybe it's break even, and then you'll see the trade will continue into your favor. People will look at you and tell you oh, you should have been more patient. And so then you'll get it in your head next time, oh my God, I got to be more patient. And then next time, you won't close a trade early, because it looks like it's being kind of a pain, but you remember the last time when you're oh, well, I wasn't patient, so I got to be patient. And then you'll end up getting stopped out, and you're you see, next time I got to close it early instead. And then the next time comes, and then the opposite happens. You close it early and it ends up going into profit. And so you end up in this frustrated rabbit hole of all this crap that's going on, and you don't understand, and you're confused. Look, let's just put it this way. The goal is to keep things simple and control risk. If you're not doing simplicity and you're not doing risk management, you're doing everything wrong in my opinion. If you just focus on super simple trades, which is like me, breaks and retest, they work fine. It's not rocket science. It's not all these like crazy complicated strategies and like cipher patterns and fibs and all this stuff right here, which I mean, people are profitable trading different ways. But what I'm just saying, if you're starting and you're not profitable, get used to just doing the simple stuff. And if you just do the simple stuff with like a super simple like risk reward starting off like 1-to-1, it's really hard not to stay profitable. So as long as you're doing simplicity in that second component, which is risk management, you're going to be okay. Where does the risk management come in? It comes with being cool with getting out of trades at break even if they're not working out. And by not working out, I mean if they're just going sideways or they're starting to trickle into drawdown and they're trickling towards your stop loss. I mean, be real with yourself. Like if you were right about a trade and the market was just going to go into profit, it would do stuff like this. Like it would just like drop right into profit. This right here, it'll reject, you'll enter, it'll go right into profit. Stuff like this, it'll reject, you'll enter, but this didn't go right into profit. It started going sideways, came back above the level, closed. Just be real with yourself. It's cool to close trades early. It's cool to take tinier losers as compared to like your full 1 to 2% stop out. If you close down here, then it's like, 0.5% or 1/4% stop out. It's not going to kill your account. And then you'll have those trades that just take off easily where it's like a 2% winner or a 3% winner or whatever your risk is. And those trades will come along. You just got to chill and just let them come along. You're never going to be able to predict it. Even if you have consecutive losers, even if you have consecutive losing days, everything will work out in the long run if you're keeping things simple and controlling risk and just trading with the trend. So this was this trade right here. I kind of went into a lot more detail on this, and I want you guys to understand how the thought process works. I want you guys to understand the logic behind it, and I want you guys to understand that it's not as mysterious and like super in-depth as you might think. It's just like this. It's pretty much just using common sense and logic and then applying a little bit of technical skills, which is like, forex education, and just putting it all together to just make the most reasonable trading decision as to what you think is going to happen. And like I said, it's not rocket science. It's actually fairly simple. So that being said, GBP USD. Let's go to the daily chart here. Price has been going in an uptrend. We've been breaking our highs, coming and testing as support, doing some weird stuff here, but then going up. Breaking highs, testing as support right here, going up, testing as support. I guess it was from these previous highs. Anyway, long story short, we've been going in an uptrend structure, but then price started doing all of this right here. And what this is right here is price refused to keep taking off. When price came in here, tried to retest this area and continue up, it tried 1, 2, 3, 4, 5 times to go up, and it just didn't go up. So I called this like a couple weeks ago. I didn't call an actual trade like, hey, I'm selling here and this is my stop loss and stuff. But I just said like, hey guys, GBP USD has given the opportunity once, twice, 3, 4, 5, 6 times to go up. And I pretty much said like in like the analysis video like 2 or 3 weeks ago, I was like, it's tried over and over and it's just not going up. It's probably going to go down. So again, I didn't call a specific like trade or a sell with a stop or target, but I said like, look at the logic behind it. If it was going to hold structure and continue up, it probably would have bounced and just continued to take off the first time. Maybe it retested a second time, but then would have continued taking off upwards. But it just tried, 3, 4, 5, 6, 7 times, and it just didn't take off. So I said, hey, GU is probably going to keep trying to go down. So what ended up happening? Well, this time around, price just kept trickling downwards. It kept on forming this downtrend area and respecting it. And then it broke out of the recent lows and continued down. So let's go in to the H4. I had this horizontal support level here placed on my chart because it just seemed the most relevant. Price had respected this as support right here, here, here. So it's just like, it's somewhere in here. I don't know the exact area, but it's something like this is the support level, okay? Because price has just like reacted once, twice, 3 times, and then it broke. So that being said, here's what I found on GU this morning. I was wanting to sell because price looks like it's just been trickling downwards for the most part. And then here on the H1, if we go a little bit lower, we can see that price broke out and was retesting this daily horizontal level. Now, this horizontal level right here was based off the daily, and I'll show you where I got it from. These were the most recent lows. So taking these into account, if we go to a lower time frame like the H4 and the H1, we can sort of pinpoint this level a little bit better. And if you can see, this is the level that I found that was most recently respected. So it's like resistance here, support, 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 all the way extended in the future where price was right now. And the only reason I gave it any credibility was because price had broken, retested, and rejected. Second time rejected, third time rejected. So when price came here to this morning and then rejected this downtrend line as well as this like horizontal area, I was thinking like, all right, awesome. It's probably going to keep going down. Prices come all the way up to the level. It's rejected it. I put in this little level in here to sort of show that's where the highs were respecting, but we don't really need that. All we're doing is just trading this like a break and retest, right? It has broken below a horizontal daily support resistance area, and then it come up and retested and rejected. So the first time it retested and rejected and fell away, I wasn't watching it, so I didn't get an entry. But the second time it came up, which was right here, maybe you can call it the third time, I saw it come up to this area. It rejected that high right there in this horizontal level with a few wicks. So I was like, cool, all right, it's probably going to go. So I entered right there, somewhere around there. I called this trade. You guys can go scroll in the Telegram earlier today, or if you're watching this a year from now, you can scroll back in this free Telegram channel a year from now. I'll probably still have it. I've been doing this for free for over a year, so I'm anticipating I'll be continuing to do this for a long time for free. But these set of lows right here. So I had an entry up there. This was sort of what my trade looked like stop above these highs, above the downtrend area and stuff like that. I just thought it was going to go below based on the H4 and daily bias downwards that we've been having now. And then also a break and retest of these horizontal levels. So this is what my trade looked like. What it did initially is it went into profit by how much, like 27 pips. So it went into profit. And then what happened is it started going sideways and started trickling up. So here's what I've seen. As it started trickling up back to my entry, and I've since closed this in small profits. It was essentially break even. I think it was like 2 or 3 pips of profit. So we'll just call it a break even trade. But here's why I closed at break even. Price started going sideways over and over and over. And then what I also found here is if we're looking here at the 1 hour, price is forming a series of higher lows, and it's just respecting these areas. And so I was like, that's not too good. Maybe I'm being impatient, but at the same time, it's not great, because if price was going to go, it would do something like this right here. It would just hit the level and just start taking off downwards super quick. And after you enter, there'll be like, a big wick come into play, which at first that's what happened. But after a couple hours of it going sideways and starting to go up, like, it doesn't help the case for sells. It doesn't make it easy. Easy trades are going to happen like this. A bunch of just bearish or bullish candles, like straight downwards, straight to wherever your target is. Those are going to be the easiest ones. That's not how this worked out. Another thing that I sort of took into account after I entered this trade is like, yo, price has respected this area once, twice, 3 times, and now 4 times. And now it's like going sideways. I was like, it's had 4 tries to just drop to hell. It's had 4 tries to just like fall away from this level and keep on going, but it hasn't done it. And so I just chose today, like literally it was like an hour. Yeah, it was like about an hour ago, about halfway through the market session interchange. I was just like, I'm just going to close the trade here because this is just not working out. Good thing too, because it looks like it would have come back to the entry and gone up a little bit. And yeah, just not work out the easiest. Could still reject this downtrend line and keep going. It could reject, like this downtrend line right here or something like that, and it could keep going downwards. I don't know. If you guys want to sell it, go for it. My point is that if it's going to be an easy trade, it's going to be something like this. It's going to break the low, retest, and after you enter, it'll just like start dropping like crazy. You have a stop above, a target below. It'll just start dropping into crazy profits. Same thing that happened right here. If it's going to break the low, it's going to come up and it's going to retest. What you'll do is after it retests and rejects, you're going to enter the trade, have your stop above and your target somewhere below. This one, see how it went into profit initially really first, and then it started going sideways. This is one of those things where like, okay, if it was going sideways right here, I would have like just gotten out of this trade. So I just would have been out of this trade. Yeah, it's a break and retest. Yeah, it's a downtrend. Price is like in a daily and H4 downtrend. So, you're wanting to sell. So that's good. So everything checks out. But you see, after you enter this trade right here, it was a break and retest. It would have started going into profit. But then it starts doing this stuff where it's just going sideways. Then it starts doing this like snaky stuff right here where you would have like almost gotten stopped out unless your stop was like somewhere further up here, which is fine. There's nothing wrong with that. But what I'm saying is that if price is going to go into immediate profit, it's going to do it like it did right here. It's just going to like drop right into profit, and it's just going to be like a nice and easy trade. And those are the best ones. This right here, like once price goes sideways for a while, if it doesn't immediately make the move, sometimes it'll do some snaky stuff like this first. Like some people call this like a fake out or a liquidity spike or a stop hunt, or they'll say they're brokers trying to steal their money and all this crap right there. The thing is when price is going sideways, it means there's not enough liquidity in the market. That just means there's not enough people like getting in on one side of the trade. Like if more people were selling and everyone was closing their buys and selling, the market would just drop like it did right here. And if more people were buying and there was just a ton of buyers in the market, price would get driven upwards. Whenever there's all this indecision, it usually means that there's not enough orders to like send the market into the next direction, which is why you see those spikes right there. They're normal. Some people think that the market makers are against them and everything's manipulated, which I'm not saying it's not, but what I'm saying is, how does it help you? What do you need to know? What you need to know is if price is just going sideways and it's not working out easily, something like that is prone to happen, and something like that is probably going to happen half the time, or maybe even more. I don't know. All I'm saying is stuff gets really weird if it starts going sideways. So this would have been a trade I closed at break even, but hey, after you would have done that, if your stop would have been reasonably far, it would have ended up going into profit. And so you can slap yourself in the face and like stress out over it, saying like, oh my God, it went into profit. I just need to be more patient next time. Or you can just chill out and say, hey, you know what? I had capped my risk when I closed at break even, and I controlled the risk for the trade, so everything worked out fine. All you should be concerned about is keeping things simple and controlling risk. You shouldn't be focused on all this wild stuff. And you see, these were like just 2 opportunities. This stuff happens across all these pairs so many times per day. If you want to stick to the daily and the H4, it tends to work a little bit better, but you can still do this on like the H4 and the H1. Just make sure you have a super clear direction, like a trending market, and make sure that you've got super clear, obvious levels where you're placing your trades at, which is on like, you know, the H4 and H1. And if you just do that, if you just trade at the trend, keep like a 1-to-1 risk reward while you're starting out learning, and just trade at the trend, you'll be fine for the most part. I want to share this trade with you guys because this one I closed at break even and it prevented a stop out. And I'll show you guys why. So let's just go to the H4 first. So what am I doing here in the H4? Or I'm sorry, on the daily. I'm seeing we're in a downtrend. That's great. That's awesome. H4. I found that we're in a downtrend. And here's the thing, we have like 2 of them, which was tested today. But for the time being, what I was looking at was this one right here, because this one was just more relevant. It was more relevant to what was going on. So I was looking at this right here. What happened is price had formed these lows right here, broke this area, didn't even retest, formed this set of lows, broke this area, retested, started rejecting. And I called this trade in that free Telegram. You guys can scroll back and see this was last week. When was this? February 27th. I called this trade and I caught like the whole bulk of the movement, like everything. Like go back there and test it. This was one of the trades last week where I made like 12 grand on. Stuff like that's going to happen, and you'll never be able to predict that. It'll just randomly happen sometimes. And this was good, but I entered, my stop was like right above the area. It just went right into profit, and it ended up being a great trade. And so that's what I'm saying, like stuff like that wipes out all your losers. So here's what happened today. Price came to this area, and let me just clean all this trash up. And this is the area I was looking at. That was a previous low. Price broke it, retested it, started falling. And then price came back earlier I believe it was last night. So today's Tuesday. Yesterday was Monday. So it was like yesterday at some point. Price came to this area. And then as it came to the area, I entered after it hit the level and started rejecting. So my entry was like something like that. It was like down here. So here's what happened after this trade like set up, right? It's a simple break and a retest of that previous low as resistance. So breaks and retest of horizontal levels during trends. That's all it was break and retest for a sell. Now where did I put my stop? I put my stop above that high right there. So it was like somewhere like right up in here. I shared it all in there. You can go and check all that later. So I put my stop above there, and I put my target like somewhere down in here. But again, like as the market starts going into profit, you're just gonna be closing your trades like half the position and letting the rest run to see how far it'll go. And that's where you end up catching huge moves like that. But that being said, I just had my stop above this area. My target was like, somewhere below here. I'm scaling out as it goes down. What happened on this trade? Well, for one, it went against me like a couple hours after I entered. Then it started dropping. Then it went up, tested this area again, started dropping. Went up, tested this area again, tried to drop. Went up and tested it again, tried to drop. And I want to point out something here. What is the difference between this trade right here and this trade right here? What's the difference between these? How long was it before this just ended up taking off right into profit? And then on top of that, like, did anything weird happen? Like spikes past the level, price trying to pin past it. Like nothing weird happened. Like after the rejection of this area right here, after the rejection, it went sideways, had another rejection candle here. Oh my God. Had another rejection candle there in the H1, started going into profit, tested it again, and then started going down. And then after it started going down, there was like no looking back. It smashed right past that low without even looking at it, came up and retested and started going down even further. Like trades like this are just like so easy. Like it just worked out really well, and we had a lot of rejection right at that low. It didn't play around or anything. But what happened with this trade right here? Price hit the area and tried again. So let's count how many times it tried to go past this level. The first time initially, that's just given. Then we had a second try right here, third try, fourth try. Let's just drag it out. Fifth try. We'll just call this the fifth try. Sixth try. This had 6 tries to reject this level and go to the downside before it ended up just breaking out, going upwards. What do you think is going to happen if it's just not easily going into profit? I will tell you, from 4 years of trading experience, it's actually been more next month. It'll be more than 4 years. It's almost my birthday. It's my birthday in like 3 days, March 6th. So after March 6th, I will be able to say that I've had more than 4 years trading experience. And I will tell you that in my almost more than 4 years of trading experience, when price goes sideways like this, half the time it's going to do something weird. It's going to make a whipsaw above the level, and it may or may not stop you out. And if anything, it'll at least like, kind of make you stressed out a little bit before then going into profit, or before testing the level on the other side and then going against you even more and hitting your stop loss. Half the time or more, something weird is going to happen if it just keeps going sideways. So what did I do? I closed the trade like right here. It was like halfway to the stop. So it was like I think it was like 1% or a little bit less than 1%. And then, yeah, this ended up spiking way up even more. Would have ended up hitting the stop loss. I had my stop above that previous high, which was like a hard stop. And stuff like this is going to happen even if you're keeping it simple, even if it's like just a break and retest. Like, this is a perfectly fine trade right here. The same exact stuff as this was up here. The same as all these other previous trades that you could have taken for like breaks and retests of these horizontal levels. This is the same exact stuff. You could have taken like a million of these trades. Most of them will work out if it's a clear trend, but like maybe 25% or 30, 40%, like whatever it is, like there's going to be trades that don't work out. This is the one that didn't work out. And on the ones that you lose, you can pretty regularly prevent them from actually hitting the stop loss by just watching what price is doing. And you don't need to be like hawkeyeing this. You can check a couple times a day. Even if you're trading like the daily and 4-hour charts, you only really need to check like twice a day. Just make like 15 minutes in the morning and 15 minutes in the evening. The daily and 4-hour charts don't change that much. And so you're not going to have to sit there like staring at them. Like, a lot of you guys like have jobs and work a ton. I worked like 80 hours a week back in 2016 as a freaking security guard and as like a target assets protection, like loss prevention guy. Like I was working a ton. Like that was like 85 hours a week that I worked. I was still able to do all this because I just stuck to daily charts. It wasn't that hard. Like whenever I would wake up in the morning, I'd look at charts for a bit, and then I go to the daily and I look at that on the in the evening whenever I'd get home from work and doing all that crap. And it was very like simple. It was just plain and simple. After I started getting a little bit more profitable, I had a little bit more time. I quit one of my jobs and kept one of them to have some cash flow coming in, so I could spend a little bit more time in the charts. And I started delving into the H1. And then with that, like trading just became so much more simple. It was just like, I don't want to say easy. Like I'm super hesitant to use the word easy, but it's not hard if you have like half a brain and you take the time to just learn this stuff and just like practice it and test it on a demo account for a couple months, make sure that everything's good. And then once you get good at it and once you get consistent, like it's not rocket science. Like I said, it's not rocket science. Then you can do this stuff and you can like keep it going and make consistent profits and trade a live account. It's not rocket science. It's actually pretty easy. So in this whole 33 minutes so far, what's funny is I've only covered like 4 pairs. But I feel like I've given you guys a solid amount of value covering just these 4 pairs because yeah, it's good. I've really broken down a lot of the psychology behind this stuff. What I've been doing more recently is I've been sharing most of my trades here in the students group chat. So like I've been way more active with my students like this past week, really sharing a lot more stuff with just them, and like, helping, because these are all like paid members and stuff in here. And so like I really just been working with them a lot more. With the Telegram, I've just been sharing like the simple like straight up analysis for you guys, so that way you guys can just like go to the chart. You've got like a screenshot of the markup right here. You've got like my explanation, it typed out, and it is really just that simple, like a picture of the chart with like a couple sentences of an explanation as to why I took the trade, and it's not that complicated. And like I said, you can get free access to this Telegram channel with almost 15K members in it, as well as, my free trading, which is like pretty much an hour-long video where I tell you about a little bit about me so you know who I am. I show you exactly how I trade, the exact stuff that I do. And then on top of that, I pitch you for like 5 to 10 minutes at the end on my paid program that I have. And then if you don't want to do that, then I have the option where you can just join this free group and you can be in here for a month, a year, however long you want. You can just follow all this stuff for free on a daily basis. So that being said, guys, I'm gonna go ahead and cut the video here since we've been going about half an hour. I'll continue to share analysis for all these other pairs and stuff, including freaking Tesla, which Robinhood froze my accounts and I couldn't like trade my stocks for the past 2 days. That was insane. But I'll keep sharing updates and I'll keep sharing all sorts of stuff for you guys. Hope you guys have a great rest of the trading week, and I hope you're able to gather something great from this video. If you enjoyed this video, please do me a solid. Just hit the like button for the YouTube algorithm. That's it. That way my channel can keep growing. Since I do most of this stuff for free, it really helps out my channel. So just hit that like button if you liked the video. That being said, guys, I will see you guys in the trading group. Cheers.